30 years ago, I started as a Forex trader. I'm now in my 60s. And I know what it's like to actually go through the pains of losing money and blowing accounts. I've done it, so I know what it feels like. And one of the things I'm passionate about is helping new Forex traders, gold traders, oil traders, whatever your speciality might be, is to avoid all those losses and pain again. And so in this video, I'm going to show you a very simple, very straightforward way to build a chart that's going to run successfully. And at the end of the day, guess what? We're all looking just to grow our trading accounts, aren't we? At the end of the day, we just want to make money. That's what it's all about, and have the skills to do it continually. Welcome to my YouTube channel. This is a new channel, but there's a lot of free resources here, including this one here, which is becoming very popular, how to find support and resistance. Have a look at that. My name is Chris. Welcome to my channel. Welcome to the beginner's course on Forex. Now, I use TradingView. 25-30 years ago, I used to use a charting service called eSignal. Very expensive. It was like $200 or $300 a month. It was very good, don't get me wrong. It worked really well and made a lot of money. But nonetheless, TradingView is a great platform because it's only $15 a month. And you get limited choices, but that's all you need to get started. And they also offer a 30-day free trial. So if you're just starting out, that's the place to go. Go to TradingView, and these are the charts that you're going to set up if you're just starting out. And even if you're not just starting out, these charts work, guys. At the end of the day, it's all about how we can make profits. And the video I'm going to show you will go into the detail of the settings. It will go into what moving averages we use, what swings we use, what's a carry trade, and what's a day trade. And I'm going to show you them all in the next few minutes. So please carry on. At the end of it, I'm going to do some analysis of all the charts just so you can see how it looks and why it works. So in this first instance, I've got the US yen. I'm going to focus on this one for now because it tends to be quite a big mover. And the only indicator you want is the regression trend channel. Now if you go to indicators and press in linear, and you want the linear regression channel, and that will come up here. Now in the first instance, what we're looking for is price to come down to a level of support where it's likely to bounce. And this actual channel will actually tell you where it is going to move. The other thing that you need to have on here is the Heikin-Ashi candle. So the Heikin-Ashi Heikin-Ashi, if I can get the words out, removes all the noise from the chart and colors the chart in the direction it should be going. So if it's red, it's going to sell. If it's green, it's going to buy. Very, very simple. There's nothing magical about this, but nonetheless, it works really well. I've done a video on YouTube on Heikin-Ashi candles, so have a look at that, and that will go into a lot more detail in how they work and why they work. But one of the things that does happen, I can tell you before you look at the video, is that what happens is the candles get smaller and smaller and smaller as the trend dissipates. So it changes direction. So as they get smaller and smaller, there's going to be a reversal. And if it happens to be on a support line, this is a support line, then there's a highly probable chance that the price is going to go up. And this might not look a lot, but it is about 300 pips, and that's what we're looking for. This one here is a lot more, but we can go into that later on. But I want to show you the next chart and the next setup. So that's very simple. So in the morning, you look at the chart, London open 8 AM, New York open 3 PM. You look at your chart and see if there's any setups. Spend about 15 minutes. That's it. That's all you need. Before I go on to the swings and day trading, I really want to start with carry trading. Carry trading is a trade that you hold for several days or several weeks. Usually a couple of weeks is enough. The longest I've held a position is 6 months, but that's very rare. So let me get into the actual setup, the first thing you want to do is put these moving averages on, because these will actually give you a guide to the trend. So we know from the daily chart, as we said earlier, that the price is hitting a level of support, and therefore it's likely to reverse and go back up. That's the first thing to know. So this is a 15-minute chart, you can see here, and the first indicator you want to do is a moving average. Just go to indicators, moving average, and you want the exponential. And you want to type left click there 3 times, because you're looking for 3 moving averages. Now you're going to, once you've got them, you'll have 1 moving average on your screen. Now double click that. Actually, you could go to the list here. So go to your moving average, go to settings, eventually. And the first one you want is 50. Just change that to 50. Make it any color you like. I've got blue, and it's quite bold, so I'm quite happy with that. Bold as you like, and I would make them bold because they are useful tools, and I'm going to show you how to use these as well. And the next one is 100, and the next one is 200. So my moving average 50 is blue, 100 is green, and the black one is a 200-day moving average. Now the 200-day moving average is the most common average that most pros use. We're going to show you how to use these threes very simply for beginners, because at the end of the day we want to make sure that it's simple enough for everybody to follow and everybody can make money. And that's the whole point, isn't it? At the end of the day, if we're not making money, what's the point? So one thing that we have often is what we call golden crosses. I'm going to widen this out a little bit so you can see it a little bit clearer. And what we're looking for once we have a buy, there is no buy along here, because notice the green, the 100-day moving average, the 50-day moving average, the 200, they're not all crossing. What you want to see is that they've all crossed. So take note of that. That's the first thing. Also take note of the price as it crosses and is confirmed. This is a 15-minute chart, so it's not particularly quick, it's not particularly slow, it's probably about average. And guess what your stop is going to be? Your stop is going to be below the 200-day moving average. So there's a stop here of 127.30. Sorry, an entry here. Let me draw the line. This is a breakout trade. Now remember, all my beginners, all the courses for beginners are free. We have lots of free resources, so have a look at those on YouTube, on the website, on Telegram. So really, I want to make sure that all of you don't go through what I went through in the early days. I mean, when I took my kids to school 30 years, they're 37 and 33 now. When I took them to school, I'd rush back. I put a trade on before they went on the school run, and I'd come back and I'd been stopped out. And it seemed to happen so often, and I just really couldn't work out why. And one of the reasons why is because we didn't have these tools. So there was no one there to train you in them days. It just wasn't something that would happen. Now there's several people. Everybody thinks they're a great trader, which is fine. So once we have these setups here and we have what we call a golden cross, all of these need to cross up. So I'm just going to show you. Now, once you open this position, so you've got a position here of 127.40, let's say, your stop is below the black line. So let's put a line there. Say 127. So we've got a 40 pip stop. So now what you're going to do during your carry trade, you're going to put this open with no target. A carry trade has no target, generally speaking. There are exceptions, but generally speaking, you have no target, because what you want to do is minimize your losses. You will get some now and again, but maximize your profits. Allow the price to move as much as it can. Once you get into that mindset, you're going to leave it alone. So you can imagine how long this takes to put on. Once you've got the setup, once you've got the buy, you've got to put that in. You're going to put your protective stop and you're going to risk 2%. Big deal, you lose 2%. Doesn't matter, does it? And that's the attitude that you have to have in order to allow it to move. If you start risking 10%, guess what? You're going to pull out early. You're going to pull out early. You're going to pull out early. You won't know what you're doing. You'll be looking at the screen all day long, wondering what the hell is going on. So at the end of the day, a carry trade is a carry trade. Let it go. So what I'm going to do is rewind this and explain what happens in terms of stops as it goes along as a carry trade. And then I'm going to move on to a swing trade. So the candles are reset now. They're not on Heikin-Ashi. You can't rewind Heikin-Ashi chart. So let me take it to this point here where you have your cross, 11:30 on the 30th of May, that is. So there we have it. Now we know that the previous high was 127.30. We know we have a golden cross. We've not had a golden cross before, and not certainly in the last probably few weeks. So let's go forward, and what I want to do is explain, make this quite fast, explain how you're going to manage this. So guys, this is how you manage it. So by the end of the day, 11:30 in the morning, by the end of the day, you're actually going to move your stop. So this is, say 12 o'clock midday. Now there is a way of actually putting it better. You can actually put an order to open here. So it kicks in at any time. But that's beside the point. You're going to come back at the end of the day, you've gone to work, let's say, come back at 5 o'clock, and guess what? You're going to move your stop to the black line. Now your risk is far less, 127.20. So now your risk is only 20 pips. Are you happy to risk 20 pips and leave it overnight? Of course you are. Your original risk was 2%, so now it's probably 1%. So let's carry on. Oh, let's press the right button. That might help. Now this is a few days going forward, going forward, going forward. Hold on a sec. It's taking off. It's taking off. Let me bring that down a bit. And guess what? You're going to move your stop with a 200-day moving average. Because if the price falls below the 200-day moving average, it's a new trend anyway. So we're challenging the market to say, okay guys, I'm going to move my stop to the 200-day moving average. If you're going to reverse and go the other way, then at least I've locked in some profits. If it continues, you're going to make a lot of money. So let's see what actually happens here. So now your stop is 128.50. So you've locked in 113 pips. Now this is 2 o'clock in the morning on the 1st of June. 2 o'clock in the afternoon UK time. So you can actually be comfortable in that. You have guaranteed to make money from a very small tight stop of 40 pips, 2% risk. You've now banked 113 pips minimum. So there we are. Now, so are you worried about this trade? What happens to this trade now? Are you bothered? You've now moved your stop to 129.30. You could just put it below it. I wouldn't bother personally. I'll put it straight on it because you're going to challenge. What happens sometimes is the price comes down to it, stops you out, guaranteed 200 pips or just about 190 pips or something. No matter what happens. And when it comes down to the 200-day moving average, there's another opportunity which I'll go into next, and that's the swing trade. So let me set up the swing trade for you. So the first thing I would do if I was starting afresh 30 years ago, as I was, I would like to have this information and become a carry trader or a position trader, whatever you want to call it. You're going to hold the position for a few days, a few weeks, it doesn't matter, but you're going to control it with strict money management. You're going to risk 2%, let's say, and you're going to move your stop with the black line. Now, if you want to become a swing trader, what tends to happen with prices, and price action is very common, is the price pulls back. Enlarge this chart for you. Let's get rid of that slightly. So what happens here, you have, this is very common within the trading pattern, is that the price pulls back and has a retracement. These are called retracements, and they're very common during a very strong trend. Now, of course, you know it's a very strong trend because you have the moving averages stacking up. So I'm just highlighting a couple of points here. So I've drawn some lines here, and I'm just going to put some arrows. Actually, before I do that, let me set you up. Let me set you up so that you can actually, if you want to be a swing trader or a day trader will be next. I'll explain how that works and why that works. So the first thing you want to do is set up the stochastic. So let's do that. So press in here, type in here stochastic, and you want the RSI. Standard setting is 14, 3 and 3. Keep it at that, that's fine. The next one is the CCI. Now we use the CCI for several purposes, but for this purpose we just want it to make sure it lines up with the RSI or the stochastic. So just click on that and you'll get that standard settings. So what we're looking for is oversold conditions, oversold. I emphasize that, but they both have to be oversold. Okay. So this is the first one. Notice here there is an oversold situation here, but the CCI is not oversold. So it's not a valid entry. And what you do simply is notice this is swung low in an uptrend. That's what you're looking for. And then you draw a line. You take this line off so you can actually see me draw the line. So you just take the high left click here. This is a trend line, and drag. Oh, I've got the wrong one. If you want a trend line, so go to your left side, pick trend line, and then now if you have a nice 45-degree angle, which is about right, then that's really perfect. And what you're looking to do is enter here as the price breaks out of that formation. Now it is a triangle formation. And it could break down and move back down. We don't know that, but now it is achieving higher highs as well. So there's one. Now this is oversold, it's albeit slightly, but it's quite valid. So let's do the dots and put the arrows in. There. There. And again, you want a nice 45-degree angle, not too steep. Don't want to get in too early, because what can happen, of course, is the price can continue down and down and down, which is fine, but nonetheless you want a safe entry. So the safe entry is on the breakout of that 45-degree angle. There's another one here. Now, as a swing trader, if you are swinging, as they say, 2 times is enough. 3rd time unlucky. So, but let's do it anyway. So for instance, if I had 2 swing trades here, I would not be going for the next one. And I'll show you how to manage that in terms of stops next. So there's another one there. 45-degree angle, roughly. And the breakout is there. The other thing you can do is achieve, once the price achieves higher highs, you can have a breakout above this area here, 129.61. So you get the point. So that is swing trading, and go for 2 swings. Now in terms of managing the swing, this is what I would do. On a carry trade, your stop is 200-day moving average. Your entry is here. So your stop is average. Okay, if it's close enough. So we're talking about 127.90, 127.40. So you've got 50 pip. It's about right. It's fine. The other thing you can do, of course, is you can take the previous low, which is here, which is below the 100-day moving average. And therefore your stop is 127.60 plus your spread, of course. So if the price is going to, once it breaks up, break down again, you're just going to lose a little bit. And if you're carry trading and swing trading, then of course you're going to, your account is just going to explode. So here's another one here. Again, if you use the 200-day moving average here, it's too far away. The risks to reward, I mean, we're looking at breakout here, 128.63, 127.80. So, you know, this 80 pips stop is just too much. So you can then start using the previous low as your stop. Now with a swing trade, you're going to start to use the blue line, which is the 50-day moving average, as your trailing stop. So here, guaranteed to make money there. Here, guaranteed to make a lot of money here. Because eventually what's going to happen is the price is going to run out of steam. And you're only looking for 2 trades anyway. So that's the swing trade, the carry trade. Let's go on to day trading. Now in terms of day trading, we start to look for targets, support lines, and aim for certain areas of the market during the day. So a day trader tends to hold the position for 1 day, maybe 2 days, but very rarely any longer than that. So once we know the rules, we can actually set the chart for day trading. And the first thing you're going to need is the pivots. Let me make some adjustments here just so it's clear. We don't need that, don't need that. So go to indicators, go to pivots, and go for standard pivots, okay? And click on those. Now I've made some adjustments. All you need to do is go to double click on the pivot. Then I'll explain what they are. And all you need is, you need the central pivot, you need S1, you need S2, S3 and S4 you don't need, R1 and R2 you do need. I've painted the central pivot black so it's easier to see, and S2 and R2 as black because they are significant. So let's see what's going on. So we know the trend is up. We know that we're looking for buys only. That's the first thing. And so therefore, what are the rules? So the rules are, let me see if I can make it easier to see. You enlarge this. So for the first thing here, we have a central pivot. And what this measures is the previous day's moves and gives you the average. Okay. So in the first instance, the central pivot, the price has to be above the central pivot. That's the first instance. That's the first rule. Excuse me. The second rule is that the price has to be above the 50-day moving average. Now, if it's above the 50-day moving average and it's above the 100 and above the 200, you know it's going in one direction. Now, of course, it can change, but at the end of the day, it doesn't get better than this. Now, with a day trader, you're going to have targets. So here's your first target. This is R1, resistance 1. So what is the target? So your target here is 129.18. And I often post this on my daily updates. I do daily updates for people to see what's going on, where the targets are. And this is what I call extension, only because it can be overextended for a day trader, not for a carry trader, but for a day trader. And that's 129.71. 70, let's say. Okay. So at this point here, once you get a breakout as a day trader, your target of 129.18 has about a 90% chance of being hit. Very, very high. If you go for the extension, in this case it did get hit, but often they go to about here and then go down a bit. But the extension has probably about 60% of being hit. As a carry trade, this does not matter because we are going to move our stop with the black line. Swing traders might move their stop with the blue line. And the stop for you is definitely the blue line, the 50-day moving average, because if it comes down, you want to make sure you minimize your risk. So in this instance here, this breakout at 128.64, your stop is going to be either the previous low here, which acts as support, or the blue line. And then as it moves up into profit, you could just leave it all day long, couldn't you? And then just come back, see if it's hit your target. You haven't got to watch it at all. Does it hit your extension target? No, by the end of the day, it's not done that. You can move your stop to here to lock in profits, guaranteed money. Or you could actually just let it go to your target. Or you could take the profits off the table. Totally up to you. The fact of the matter is, taking profits, there's nothing wrong with that, but don't take profits here. Let it go to at least first target before you make your mind up about that. But the whole point of this exercise is to have one chart where you can carry trade, one chart where you can swing trade, and then one chart where you can day trade. This is really, really important because this is achievable for everybody. So have fun with this. Let me know how you get on. It'd be great to hear from you and great to get some questions and feedback from you, because it's all about learning and earning, isn't it? And I'm happy to give you my time to make you successful.